Our next presenting company is Avino Silver and Gold Mines, and with me I have David Wolfin, who is President and CEO of the company, and he will go on with the presentation now.
Thank you and welcome everybody. Avino was incorporated in 1968. We have over 40 years of mining production in the district of Durango, Mexico. It's a family-run business. My father founded the company. I worked in the mine as a teenager. I worked in the field of finance in the 90s and joined him in 2000s. I negotiated. We only owned 49% in the early 70s because there was no NAFTA in place. So I negotiated to buy the other half of the mine out. That happened in the mid-2000s. The market cap of the company was about $1 million. Today, we're $1.1 billion Canadian. So we've delivered a lot of growth, and our tagline is a clear path to transformational growth. It's clear because we own the assets. It's not through M&A activity. We're going to go from one producing asset to 3 in the next 5 years. Here you can see, so the project portfolio is made up of the producing Avino Mine. We're a junior producer right now. We produce between 2.5 and 2.8 million ounces of silver equivalent. Preciosa is our second mine we're building right now. We bought that in 2022 from Coeur Mining for $30 million. They paid $358 million buying Orco Silver in 2013. So we bought it for 10 cents on the dollar, and so that was very accretive for us. And then the third asset is the Oxide tailings project. This is leftover waste from when we opened pit mined in the 70s and 80s. And with the invention of leaching, we're now looking at reprocessing that. So that's our third asset. Large, huge silver equivalent resource base, 277 million ounces of silver equivalent in the measured and indicated category, and then 94 million ounces of silver equivalent in the inferred category. 60% of that is pure silver. So these are the catalysts for growth. We're located in the heart of Mexico. It's a safe jurisdiction. It's in rolling farmland. It's not in a remote area. Why is it safe? Because there's villages that are all around the mine. The mine has the unique distinction of being the very first mine discovered in the state of Durango. In 1558, Captain Ibarra of Cortez's army claimed to have found a mountain of silver. So even after 500 years, we're still mining, and we got 100 years of mine life left ahead of us. Here's our growth. So you can see significant growth in 2025. You'll see the dark blue represents the producing Avino mine. The lighter blue on the graphs is the new Preciosa mine that we're building now. And the lightest blue in 2028-29 is the Oxide tailings. These are the contributions that'll take us between 8 and 10 million ounces of silver equivalent, which is considered intermediate status. And there's a void in that space right now because 3 intermediates just got taken out, Mag, Silvercrest, and Gatos. So a lot of attention is being focused on Avino right now because this is a clear path and we own it. So it's organic growth. And here's our production profile. So this year, 49% of our revenue will come from silver, 19% from gold, and 31% from copper. You can see next year, 58% will come from silver, 68% from gold. In 2027 is silver. And we think these are conservative, and I'll show you why in a moment. We think that we could raise the bar on the silver production. Key financials, so in Q2, we produced revenue of 21.8 million US, gross profit 10.2 million, net income after taxes 2.9 million or 2 cents a share, free cash flow 4.4 million, cash costs and all-in sustaining costs. So our cash cost per ounce is $15. All-in sustaining is $20.93. So we're generating big margins in Q3. I think silver was about $38 or $39. And so 50 to 60% margins. And in Q4, if silver stays where it is, the margins are going to be very, very good. Our balance sheet is debt-free and unhedged. We reported $37.3 million in cash at the end of Q2. Today, we've got $55 million in the bank, so we're generating free cash flow right now. And just, I'm not going to read all this, but if you look at the right side, everything's positive. Free cash flow up 1,000% year on year. And here you can see the cost per ounce. So the cash cost $15.11, as I mentioned earlier, $20.93 all in sustaining. This will go down as we bring on La Preciosa because it's higher grade. The grade at the La Preciosa mine is 3 times higher than what we're mining now. And so you're going to see a meaningful contribution with higher grades next year. And then cost per ton at the Avino Mine. So the Avino Mine is a world-class mine. We're mining down 350 meters of mineralization. We've extended the mineralization to 700 meters. And it's a large stockwork system, and what that means is it's a swarm of veins. It's not an individual vein. So we're mining 600 meters by 30 to 50 meter widths. So we're long hole sub-level caving, which is a cheap form of mining. And this is why you see our low cost, $52.61 cash cost per ton, and then $73.20 all in sustaining per ton. It's unheard of that underground mines operating at under $100 per ton. So you can see we're doing a very good job in managing our costs. Recent inclusion in the TSX 30. So we were ranked in the top 30, actually ranked 5th. We got to ring the bell on the Toronto Stock Exchange a couple weeks ago. And they used a 3-year share price performance, and we increased by 610%, and our market cap increased by 778%. So we're firing on all cylinders. Our shareholders are very happy with our performance. And you can see the liquidity in our stock. We've got 5 ETFs that own us now. So we're trading millions of shares a day on the NYSE American. Corporate transaction. So we had the unique opportunity to acquire the royalty on La Preciosa. Most companies are selling royalties. We acquired it and canceled it because now there's more upside for our shareholders. So we're quite proud of that. And then highest mill throughput in the Avino history. We increased the mill productivity by 36% in Q2. So our operations teams are doing a very good job there. And then we started drilling. We got 3 drills turning, 2 at Avino and 1 at La Preciosa. And we wanted to confirm the grade that we're about to mine at La Preciosa. And most of the core samples were already used in studies, economic studies that were done by the previous owners. So we had to go and re-drill it. And what did we do? We proved that the grade is way higher than what they reported. 7.9 meters of 1.6 kilograms of silver equivalent, far higher than our resource grade. So it's very rich where we're going into. There was one intercept that had 15 kilograms of silver equivalent. So the market really likes this because there's not too many high-grade silver projects out there. Here's the location, 19 kilometers away from the Avino Mine. You can see it's in the high desert, so it's safe. It's not in a wooded area. We built a dedicated power line, 20 kilometers long, capable of 7.3 megawatts. Current excess capacity is 2 megawatts. So when we go to build out our 3rd asset, the Oxide tailings, we have excess electrical capacity. Paved roads all around the mine make it a safe place because it's busy. We're not in a remote area. High water supply. So we built a dry stack tailings facility, state of the art, and we're recycling 85% of the water that we use. So we're a very ethical company. We have 100% Mexican labor force, right up to our chief operating officer, which makes for good morale and low labor turnover. Here you can see La Preciosa, 1,500 drill holes. $90 million has been spent on it by Pan American Silver, Coeur Mining, and Orco. So it's been geologically de-risked. And if you look at the grades, it's between 150 and 500 grams of silver equivalent per ton, or it's pure silver. So it's all ore grade material, the whole entire deposit. And here you can see hot zones above 500 grams of silver. And in the table below, 17.4 million metric tons of measured and indicated, and 4.4 million metric tons of inferred. So this represents decades of mine life. And how we're mining it is through underground, through a decline ramp, 4 meter by 4 meter. So rubber tire trucks can go in there and trackless and mechanize mine it. And then we're going to haul it 19 kilometers away and process it through the Avino plant. And here's some of the drill holes that I mentioned. So 7.9 meters of 1,600 grams of silver and almost 2 grams gold. So it shows that we're really going to be mining high-grade material when this material reports to the Avino mill. Brand new equipment from your lovely country. This is a Sandvik Jumbo, €1 million piece of equipment. We had it there for day one for processing or starting the decline ramp at La Preciosa. And other new equipment from Caterpillar Jumbos and blasting equipment. It all started in April this year, and we've already intersected La Gloria and Abundancia vein, and that material is being stockpiled on surface and hauled to the Avino plant 19 kilometers away. So the third asset is the Oxide tailings project. So you can see the development we've done over the years, and we did a pre-feasibility study on reprocessing this material. This is in the leftover waste from when we opened pit mined in the 70s and 80s, and we did a pre-feasibility study which gave us a $61 million US post-tax net present value with a 5% discount. But that was using $23.45 silver and $18.40 gold. With spot pricing today, the NPV is $250 million. That's our third asset. So it's going to be a company maker. It's going to be really profitable. You can see on there $10 all-in sustaining. So if you combine the three operations, Avino, La Preciosa, and Oxide, it takes us in the low teens for all-in sustaining costs per ounce. And then here's something that we're proud of, 53.1 million metric tons of measured and indicated, 23.8 million metric tons of inferred, so 76 million metric tons. Our processing plant can do 750,000 tons on an annual basis. This represents 100 years of mine life. So we are now in a financial position where we can look at further expansions beyond the 8 to 10 million ounces per year, which is going to happen next year. And we also are going to be publishing a reserve calculation in Q1. So stay tuned for that. So milestones you can see here. So what's upcoming? First production from La Preciosa in Q4, so it's happening right now. Completing the drill program with the 3 drills turning right now, and then the reserve calculation. So we're quite proud of this. We won an award 3 years in a row for being a socially responsible company. This is awarded by an independent board of philanthropists in Mexico. It's showing that we're an ethical company. Research coverage, you can go on our website and can see that. And sort of summing things up here, you can see our trading and capitalization. So 800 million market cap US, 1.1 billion Canadian. You can see the 52 rate range. We're trading at the high end of that right now and growing. Largest shareholder, I put my money where my mouth is. I'm the largest shareholder of the company outside of the ETFs. And so management owns about 5%, institution owns 20%, and retail owns 75%. So we got a good mix of shareholders there. We trade 5 to 6 million shares a day on the NYSE. Shares outstanding, 152 million, 10 million options and RSUs, no warrants. And 162 million fully diluted. So key takeaways, it's a primary silver producer and explorer with a clear path to transformational growth, which I laid out. Stock performing very well, included in the TSX 30. 5 ETFs own us now, so very liquid stock, production growth, cash on hand over 50 million, and a long track record, 57 years. So strong balance sheet and good trading liquidity. And with that, I'll wrap up the presentation.
Thank you, David. I had a couple of questions to you.
Yes?
First of all, you mentioned large inferred resources.
Yes.
What is the strategy and the timeline for turning these into mineable reserves?
So here you can see measured and indicated. So that's above inferred. So that's basically going to be converted to reserves. Mm-hmm. So when I negotiated to buy the other half of the mine out in 2006, we were in a rising metal market. So I raised $10 million and put the mine back into production without a feasibility study. So I didn't need a desktop to tell me what we were actually doing. Yeah. And I didn't need bank financing. So the only other way to convert resources to reserves is by revenue. So you have to have 90 million in revenue, which we crossed that threshold. So now we're coming out with reserves in Q1. Mm-hmm.
And looking ahead here, well, the next 4 years, what do you see as the main catalysts for growth?
Well, as I mentioned earlier, the main catalysts are bringing on Preciosa, which you can see here, and the Oxide tailings. So here's the catalyst for growth. It's a clear path because we own these assets. So you got the producing Avino Mine, Preciosa, and Oxide tailings. If you look on the graph next year, 30 to 40% growth is coming from Preciosa with minimal capex. The capex was under $5 million because we're not building a new processing plant. We're hauling it to Avino. So you can look at that growth is driven by grade, mm-hmm. High grade.
Yeah. And as I understand it, you plan to develop the 3 assets that you have simultaneously.
Yes.
Is your capital enough for that? I mean,
yes.
Is there any external funding needed for
Not at the moment, and we have different levers that we can use. We are in business with Samsung, mm-hmm. C&T. We've been selling them product for 10 years now. It goes in their electronics. And so originally in 2016, they gave us $10 million and we expanded the mill. We've paid that off. So we can do that again. With our trading partner. Equity raises, we're not planning to do any major financings, but we have levers to raise money if we need.
Okay. Thank you very much, David.
Thank you very much.
Good luck going forward.
Thank you.